So you have a little bit more time to expand on your stock picks this evening. And Ricus, I'm not sure if we have now jumped the gun. You mentioned Procter & Gamble and Caterpillar. And I couldn't actually tell if Procter & Gamble was your stock pick or if it was Caterpillar.
No, it was the third one. It's called Illinois Toolworks.
Oh, there we go.
First of all, they're a hugely American company, usually diversified. They do auto parts, they do welding machines, they do food services machines, they do electronic metering equipment. So you can see where it's based. It's based on the bedrock of American industry. As far as the American economy is concerned, we've got a sturdy economic growth and lowering rates. I mean, I don't think you can get a better economic environment. So as far as the domestic, shall we say, manufacturing sector in America is concerned, that's been left behind by all the hula about NVIDIA and all the tech shares. I think there will probably be a shift in investors' money towards that kind of company, that kind of industry. And Illinois Toolworks very well based on that. As I've said, they've have a constant record of dividend increases that spans, I think, almost 50 years. So they know what they're doing. And technically, graph looks right.
Yeah, and they've actually had a really good run, well, certainly since October and even over a one-year period. Okay, so Illinois Toolworks, that is probably pretty left field, but thank you for Ricus. Jean-Pierre, what takes your fancy?
I am choosing Multichoice tonight. And the reason I'm choosing Multichoice is not necessarily taking a long-term view about video entertainment and what might happen to Showmax and what's going to happen to their betting business and the rollout of online television on your cell phone on the African continent. And those are all very nice, but it's because of the special situation of the offer from Canal Plus that is expected going to be made at 125 Rand a share in the next few weeks. That is the expectation. Now, the interesting thing here is Canal Plus is in a little bit of a corner, in my opinion. They have to make an offer based on what the takeover regulation panel has ruled, but they need the offer to be successful. There's a risk that they make the offer, they don't get enough acceptances to take them over 50% or whatever number they want, maybe even to take out the whole of Multichoice Group, and then do the corporate action to make sure they solve for the foreign shareholding at Multichoice South Africa, the subsidiary. So they need to make this work. And the Multichoice group board obviously knows this.
Yeah.
So 125 might not be the final offer. And Canal Plus cannot risk the offer leading them not to take over the whole of Multichoice Group, because then for a whole year, they're not allowed to do anything, they're in limbo, and they might need to then force sell the indirect stake in Multichoice South Africa. So given all these permutations, I think your downside is relatively capped if you buy below 110 Rand.
Okay.
Your upside is at least 125 Rand. Maybe it takes a year to 18 months for that deal to happen. Plus, you could have another bonus if they do increase the offer, which I think is a distinct possibility.
Yeah, a very interesting game of chess playing itself out in that particular deal. Jean-Pierre Ricus, it's great to chat to you. As always, thank you very much for joining us this evening. Jean-Pierre Verster is from Protea Capital Management. Ricus Reeders is from PSG Hole-in-One Ruimsig, and we will be back with the close up next. Stay with us.